Alright, so I want you all to take a close look at this chart right here. All of these three moving averages are actually based on 100 periods. The difference is that they are completely different moving averages. So in other words, the type of moving average you use matters a lot. And in this video, we will take a look at the best moving averages, and I will also talk about when to use them and how you can change the settings to potentially improve them even more. But alright, so before we can start taking a look at the different moving averages and when to use them, we of course first of all need to know what are moving averages in the first place. What are moving averages in trading? Well, in very simple terms, a moving average is just a line that smooths out the price data. And we do this to basically show trends more clearly. We reduce some of the noise. So this can help traders and investors to spot the direction of the market. But here, and this is very important, the different types of MAs, or in other words, different types of moving averages, react faster or slower to price changes. So depending on what type of moving averages you use, some moving averages will provide faster signals, but when they provide faster signals, they might also provide some more false signals as well. So it's very important to learn about the moving averages you are using. But right, so now you might wonder, why do we have so many different moving averages? Well, as I already mentioned, some moving averages are slow and stable, and this can be good for many reasons. For example, if you are looking for the overall large trends, or if you are just a trader that are looking out for larger moves. You know, you can trade very short moves and get in and out of the market quickly, or you can focus on longer term moves with a higher risk to reward, and perhaps take fewer trades but more trades. So some moving averages are slow and stable, while others are fast and responsive. And this is in general better for, as I said, quick in and out. Maybe you are either, day trading, or you might even be scalping, right? Then you might want to use, a shorter term moving average. And I do have some very interesting moving averages we will talk about in this video. But here, each type has, different strengths and weaknesses. And it will depend on things like your own strategy as well as your time frame. But alright, so now I want to show you guys some of the best moving averages step by step. And I do want to start here with the simple moving average. Some of you guys watching the video might, think already that, why are you even talking about the simple moving average? Is that even a good moving average? And in my opinion, it can definitely be useful. But first of all, what is the simple moving average? Well, it's a moving average that gives equal weight to all past prices. So if you, for example, have a 100-day simple moving average, this will just be an average price of the last 100 days. And this moving average is very smooth, but it will have lots of lag. So it will not react that fast. And that is, a reason why it might not be very useful, for example, for short-term traders. But here, it can be a great tool for long-term trends. And you can use, for example, the 50-day or 200-day simple moving average. These are some very common simple moving average settings. But as I said, it's not that great for short-term trading. But in which cases do you want to use the simple moving average? Well, it can be used for stocks, crypto, forex, but in general, it's more often used on the higher time frame. Think, for example, the daily time frame, or maybe the 4-hour time frame, and so on and so on. Longer time frames in general, and it's mainly used for long-term trend direction. And some traders use it for support and resistance. I'm not a very big fan of using simple moving averages as support and resistance, but many traders do that. And now let me just show you real quick how to find the moving average, the simple moving average in TradingView. By the way, if you don't have TradingView yet, I do have a special link to TradingView that you can get to try TradingView Premium for free for 30 days. And you will also get a $15 bonus if you later on decide that you want to upgrade. So I will make sure to link that. I will make sure to drop that link in the description and comments. But now, to find the simple moving average in TradingView, you want to search for moving average simple, just like this. And you can see we have tons of community indicators as well, but this is the normal indicator, moving average simple. Let's open this one up. And here in the beginning, when you first open it up, it usually sets automatically to a length of 10. But for this video, so we can get a nice comparison, I'm gonna change the length here to 100. So you go up to the settings, change it to 100. I'm also gonna change the style here to make it a bit thicker. So now we have a 100 days moving average on the chart. The reason it's calculated on days is because, as you can see, we are right now on the Nasdaq daily time frame. But right, guys, so now let's move on to the next moving average, and this is a very popular one amongst traders. This is the exponential moving average. And one of the reasons that this one is more popular for than the simple moving average, especially for short-term traders, is that it gives more weight to recent prices. Remember, the simple moving average gives the same value for all candles in the calculation, while the exponential moving average gives more value to the recent prices. And that is a big reason why short-term traders prefer the exponential moving average. As you can see right here, it has faster reaction than the simple moving average. But what is the exponential moving average good for? Well, as I mentioned, it's good for short-term trends and also momentum strategies. Momentum trading is a very useful concept, and if you want to learn more about momentum trading, I actually do have a full guide on that right here on YouTube, and I'll make sure to link that video up in the video card and the description. Definitely highly recommend. But what are the downsides here with the exponential moving average? Well, it can give false signals, especially in choppy markets, and it can give more false signals than the SMA. So that is something to have in mind. As for the main markets to use the exponential moving average, it's most often used in crypto or Forex and on intraday, but you can use it for stocks as well. But what I do want to mention is that if you are short-term trading using the EMA and you are down on maybe the 5-minute, maybe even the 1-minute time frame, you do want to make sure that what you are trading has enough liquidity. Liquidity is super important also to learn about, but luckily I do have a video about that as well, and you will find the video in the video card and the description. As for the exponential moving average, you can use it for swing trading. I should also add here that you can definitely use it for day trading. You maybe can use it for scalping as well, but for scalping, I do have some more and sort of special moving averages I want to talk about later. But right, so now let me just super quickly show you guys how to find the exponential moving average in TradingView. So once again, you go up to the indicators tab in TradingView, and you always want to search for moving average first and then exponential. This is the easiest way to find the moving averages in TradingView. So you want to open up this one. Now let me just change a few settings. We'll go up to the settings tab. So we can see the exponential moving average clearly. Let's change it to orange, make it a bit bigger. And to get a nice comparison, let's change the length to 100 as well. So now both of these, remember, the blue one is the SMA, the orange one is the EMA. Both of these are based on 100 days, but as you can see, the EMA actually reacts a bit faster, and this is exactly what we talked about. For example, when we saw the strong move to the downside right here, you can see that the EMA actually turned down quicker than the SMA, and that is what the EMA is all about. But all right, so Now, the next moving average I want to talk about is the weighted moving average, or WMA. This one is not as common, and I think one reason is because it's very similar to the EMA. So I don't want to spend too much time here, but this one is weighted. The most recent candles gets the highest weight. And as I said, it's faster than the SMA and very similar to EMA. So you can use this one for, more short-term trading. Some traders use it for crossovers. I'm not the biggest fan, but I still want to mention it. And as I said, this one is a little bit less common and can be a little bit jumpy. But for what do we use the weighted moving average? Well, it's more used for shorter term trades compared to, for example, the simple moving average. And an example of a setting is the 10 WMA on the 5-minute chart. Now, let's just quickly jump back to TradingView here. I do want to show you guys quickly how to find the weighted moving average. Once again, we go to the indicators tab, we search for moving average, and then we search for weighted. So we open this one up, we go to the settings, change to 100. Let me also change the style here so you can see it more clearly. Let's use maybe pink here so you can see it like this. And as you can see, it is, remember, the orange line here is the exponential moving average. And you can see that these lines move very similarly, but you can see that the distance from the price is a bit different, right? So they are not exactly the same, but the actual movement are, at least faster than the SMA, which is the blue line right here. But all right, so now we are starting to move into some of the more special and interesting moving averages, at least in my opinion. And the first one I have to talk about is the Hull moving average. And what the Hull moving average does is that it combines weighted moving averages. So it combines weighted moving averages for a very low lag and smoothness. So this is a special type of moving average that can be very useful especially in certain markets. So what this moving average does is that it tracks trends fast, and it also reduces noise. So many traders actually use the Hull moving average for entries and exits. If I have to talk about a downside with a Hull moving average, it may give false signals and flip too often, especially in sideways markets. So, you do want to avoid, like pretty much most moving averages, you do want to avoid using it in sideways markets. But now then, what should you use the Hull moving average for? Well, some of the most common markets and time frames is to use it for crypto and forex scalping. So you might scalp, the 1 minute, maybe 5 minutes, maybe 15 minutes. And it's also used for fast trend following. For example, using the 21 HMA on the 15-minute time frame. All right, so now let's open up the Hull moving average in TradingView, and now you are going to start to see a big difference. So let's search here for Hull moving average right there. We open it up, and just like with all other moving averages, we do want to change this one to 100 so we get the same, the same length as all the others. And let's change the color here. What colors do we have left? Maybe purple, like that, and also make it bigger. So now you can start to see that this moving average is very different. You can see, first of all, that it's much more smooth. It doesn't go up and down a lot. And at the same time, it reacted very fast. For example, you can see when NASDAQ started this downtrend right here, you can see that it reacted super fast to this new trend. And it also found the reversal very fast as well. So the Hull moving average definitely have high potential in trends, but at the same time, if you look at the shoppiness right here, you can see that when the market is going sideways, it's not that useful. All right, so last but definitely not least here, I want to talk about the ALMA moving average. This is yet another less common moving average, but it can be very powerful. But first of all, how does the ALMA work? Well, the ALMA uses something called Gaussian weighting, and this will give clean smoothing. So just as the whole moving average, it has, a very clean smoothing. And one very nice thing about the ALMA is that it's very customizable. So you can change things like the offset and sigma, and you have lots of room to affect the smoothness and the speed of the ALMA. But now, what are the pros of the ALMA? Well, first of all, it's very smooth and very responsible. Very, very nice. Also, another plus here is that it's pretty good at filtering out fake moves. Yet another very useful thing. However, with the downside here is that in order to, get the most out of the ALMA, you might need to change a few settings and fine-tune it to your specific trading strategy. Now, as for the use cases, some use cases are, for example, using it for trend confirmation. You can use it for support and resistance zone. Once again, I'm not the biggest fan of support and resistance for moving averages, but so many traders use it, so I still want to include it. You can also use it for mean reversion. What is mean reversion? Well, when we have a moving average, many traders use it not as strict support and resistance, but as more of a sort of statistical, think of it as a statistical average where the market tends to, come back to that average. I don't have time to go into it deep in this video, but that might be something for a future video. But all right, so now last but not least, let's open up the ALMA moving average in TradingView. Once again, we go up here to the indicators tab, and now we want to search for the ALMA. I think is enough. Yes, you can simply search for ALMA, and you want to open up this one right here. Then we go to the settings once again. Let's change the color to maybe, maybe green like that. Make it bigger and change the length here to 100. As you can see, as I talked about, the ALMA have some other parameters as well, like the offset and sigma. We don't really have time to talk about that too much in this video. So now let's just change the length to 100 so we get a nice comparison. And as you can see with the ALMA here, it's like not as responsive as the Hull moving average, but it's much more, at least much more faster compared to, for example, the simple moving average and the exponential moving average. But alright guys, so this video is getting very long right now. I do have one more slide that I want to cover, but I think I will actually save this one for our YouTube channel members. If you didn't know, we have an amazing community right here on YouTube where I share extra material, such as, this full presentation with the last slide. I often save, I cover a lot here on YouTube, as you know, if you're following, but I often save some of the more advanced material for the YouTube channel members. I also share some exclusive videos, and you will get some emojis and priority replies and so on by joining. So if you want to join, consider joining by clicking join down below. All right, so in order to use moving averages effectively, you need to dive deeper into price action. So when you have the time, I highly recommend to watch this video right here. Simply click or tap on the screen.